Hello, my name is Jerry. Welcome to Interesting Colors. This is part 3 of the Big Picture series, and part 3 is all about timing, and timing considerations fall into the state where you know you've got a bullish trend, you know that the trend that you've selected is a high relative strength, and based on those two other factors, it's time to consider when is the optimal time to buy. So the following diagram represents the whole ribbons, and the whole ribbons are two moving averages, the whole 10 and the whole 20. If you are in a bullish trend, it means that the whole 10 moving average is greater than the whole 20. So here's a case of where we have a rising series of candles, and the whole 10 is clearly greater than the whole 20. And over on this side, we've got the whole 10 less than the whole 20 for a bearish scenario. So the thing that goes hand in hand with this is the timing factors associated with the moving averages. So if you look at the moving average, if the moving average is green, it just means it's rising. If it's orange, it means that it's falling. And if you consider how long it's been falling or how long it's been rising, you can begin to get a feel for proper timing considerations. If you look, the optimal time to buy would be down here at support, which means that the 10-day or 10-period whole moving average would just be on the verge of either turning around, which it is right here, or having just crossed through the whole 20. And if you look at the scenario, you can kind of see that it doesn't always, but it tends to set up to where the 10 will reverse directions first. You'll have a cross through the 20, and then sometime maybe at the same time of the cross or slightly thereafter, the whole 20 is going to reverse directions as well. So the trick becomes being able to spot those conditions from the watch list. And so in our particular case, if we can home in on all of the market phases that have a bullish posture, and they clearly are in this green area here, that's the first criteria for setting up a strong long stock trade. And if you look over here for relative strength and see that it's in a strong bullish posture as well, so it's strong relative strength for the 5-day, 10-day, 21-day, but primarily 5 and 10, they definitely have to be in the green zone. So if you're looking across over here, and we happen to see that any of these are bullish, as we look across over here, we can see that this particular stock happens to meet all of the criteria, and oh, by the way, it has a relatively fresh 10-day reversal. So if we look at that stock, we can see that it's just recently happened. It's just happened to where the 10 has just changed direction to the upside. It hasn't gone through yet. It hasn't gone through the 20 yet, but the 10 has changed direction and the 20 has changed direction. But the significance of this is the fact that they have in fact done that, and it's kind of sort of setting up. So that's kind of how the ribbons work from a timing perspective. You're trying to find things that have these lighter colors. The numbers in the columns represent the number of days or periods. These are all daily aggregation time frames for the 20, the whole crossover, and the whole 10. And the numbers in these columns represent the number of days that it's either been in an uptrend for the whole 10 or the whole 20, or the number of days that it has been had a bullish posture for green backgrounds. Light green means within the last 3 days, and dark green means it's been 3 days or longer. And likewise, if you're dealing with the red colors, the light red means it's been bearish for 3 days, and dark red means it's been bearish, either bearish at the moving average level or at the posture level. So that's just one of the things to consider. But generally, when you're dealing with timing, it's nice to have multiple things kind of sort of happen at the same time. And the watch list kind of shows that we've got some of that stuff going on right now. And one of those other things that fits in there is our price patterns. And if you look at this column, which stands for breakouts daily aggregation, it is designed to pick up a number of price patterns. And I wanted to show you what those were. We got down in here, and it will pick them all. It'll pick up 20-day highs. It'll pick up a 55-day high. It'll show CAHOLDs, close higher gaps, and those are all of the bullish price patterns. It'll pick up close below the high day and also close lower gaps, and those will be red. And there's kind of an interesting color scheme that goes along with these. One, the column's going to have the whatever considerations happened for that particular day. So the coloring scheme is kind of like is designed so to help identify days that have multiple signals happening at the same time. So if you've only got one signal happening at the same time, it's going to be green. If you happen to have two signals, here's a case where we've got a 20-day high and a close higher gap, you've got kind of an orange color. And if you have 3 or more signals happening at the same time on the same day, you're going to have a plum color. And likewise, if it's bearish, we don't see any super bearish ones here, so all these just represent only one bearish condition for that particular day. So I want to show you what it looked like. Here's a case in point where we've got for this particular symbol, we've got two conditions that happened at the same time. We happen to have a 20-day high and also a close higher gap that happened on the same day, and we can clearly see the close higher gap. We could see the 20-day high if we looked at a different chart. This white triangle right over here means that it's got a 20-day high for the day for constellation energy. So this is a case where we have multiple conditions happening at the same time. I wanted to take the time to put this chart back to its default settings for essential grids for this particular guide to show you some additional things. The other thing from a timing perspective that I like to look at are crossovers, the 10-day exponential cross of the 30-day simple moving average. I call those 1030 crosses, but they've also got names like a death cross. So if you see this case over here, which happens to be the white line, is the 10-day exponential moving average, and right here it crossed below the 30-day simple moving average. So we've got a white arrow up here, and we had a white arrow on the other side. And if you're looking for that type of a configuration, and you look for this chart here, let's look for FTNT, you can see that if we happen to have a bright green background, we will have a bullish crossover or a golden cross. And if it happens to be a red background for these weekly bars, it'll be a death cross. And as it turns out, the crossovers work both for the weekly percentage gains and the monthly percentage gains. It's just that on the weekly percentage gains, we're dealing with daily bars, and on the monthly percentage gains, we're dealing with weekly bars. So you can kind of get a feel for what's happening at the longer aggression period. The other thing to note in these this diagram, let's pick this guy right here, are these things that I call the white dots. And if you carefully study these things, these white dots kind of happen at periods of either support or periods of resistance. What they really are is whole 15 period reversals coupled with the market forecast study. And I've talked about how those things came about in some of my videos, but it's also described and documented in the user documentation set that I'm including with this particular video. So if you wanted to get the details on what it means to have a white dot, it's, you know, some additional reading is required to show that. But I like to look at the white dots when I see them. They show up in here as blue backgrounds, and if it's at support, the letters are black, and if it's at resistance, the letters are white. So you can easily see which white dot we're sort of talking about. And the last thing that I have in here is these yellow yellow bars. And this basically came from a code snippet that I got from James Boyd that tries to show bull flags setting up. And as it turns out, it's kind of a study that marries the moving average with the MACD and looks for a reversal. And I've noticed that typically you're going to see these things show up when CAHOLDs come along, because you're kind of sort of looking for a snapback from the time it was going down. So here's a case where it was falling, and we got a bull flag. We got a bull flag indication right on this day, but we also got a CAHOLD event at the same time. So the significance is that what's happening is that you're seeing price patterns tie together with moving average type patterns, and also the whole ribbons kind of sort of at the same time. So you're trying to look for spots where those things are kind of all happening, and they're all timing related events that kind of sort of are sitting on top of a strong trend and a strong relative strength scenario. The last thing that I want to talk about is this thing called the price percentage oscillator. And I like to look at that. I'm going to show you what that looks like. So it's for weekly bars, and I use those. Here's the chart that's got the weekly bars on them. So it turns out that this line right here, the PPO, is this line that's showing various colors on it, whether it's rising or falling. And it turns out that occasionally you'll bump into spots where you have a series of white dots at the bottom or a series of white dots at the top. And they don't happen very often. This is a 3-year weekly chart. So you're looking back over 3 years, and we don't have very many weeks in that time frame where this condition happens. And what it means is that these are strong overbought signals or strong oversold signals. And the thing that I like to look for is if I'm lucky enough to find a situation, let's look at see if I can find one here, where on the monthly percentage gain or weekly bars, I'm looking for a situation where we've got a white dot on a weekly chart, and there happens to be one right here, and I'm thinking that perhaps maybe if I'm lucky I don't see it, but I can start to see the PPO start to rise, and if I'm lucky I'll find another one. Here's one here. What's the situation? I'm starting to see it rise, but I haven't seen any white dots at that level. Oops, wrong one. I want to find black. These are all looking pretty good. QCOM. Sorry guys, when I want one I can't find it. There we go. There we go. This is an interesting chart. So here's Regeneron. Very interesting. So we see there's a white dot, which is what we homed in on this particular thing. This is a white dot right there at support. What happened? A white dot at support. And lo and behold, we happen to see a number of white dots on the PPO line, signaling that we are at the less than the 10th percentile of what the price percentage oscillator would look like over the last year. And oh, by the way, the PPO is starting to rise. This is indicative of a significant potential change in the trend. And as if you look at the chart, you can see that we've had a pretty good drop. Now the chart hasn't actually jumped above. It hasn't jumped above the 10-day moving average yet. It's still in the state of P1, but all I would tell you is, hey, this is one of those things that I would put on my radar and be watching for. And I would include the PPO as one of those considerations that I don't have it shown on the watch list, but you can find it if you look for white dots that are at support on a weekly bar chart. So with those thoughts in mind, I just wanted to make sure that you understood that there are a number of things that I would call timing related events coupled with the right trend and the right relative strength. And if you pair those together, you're going to typically see that they happen kind of sort of almost at the same time. So anyway, that concludes part 3 of the big picture. So if you like this video and you got something out of it, please consider hitting the like button. Thank you very much.